So how do tax brackets really work? Tax bracket management is about finding those imbalances in tax brackets. To find those imbalances, you need to understand how they work. The Tax Bracket Manager calculator is the best tool for truly learning this because of the repetition, the practice. But first, to provide some base level knowledge is important too. Step one is to understand that there are two buckets that make up taxable income. Taxable income is just not that line item on the tax return. It's made up of these two buckets inside of it. There's net ordinary income, there's capital gain income. After running a dozen scenarios through the Tax Bracket Manager, this will be second nature to you. This will be easy, so don't get overwhelmed right now when you're reading this or listening to this. I find this area also to be the most confusing for clients, advisors, and yes, even tax preparers. To give you some perspective, as an advisor who works with multiple CPAs and EAs, they don't understand this just because they're a tax partner in a big firm. Last year, I worked with a tax partner in a very big firm with multiple years of experience, a couple decades. He looked at the taxable income number on the tax return and said, hey, this is where we at in the brackets. Well, the fact is we could do a Roth conversion at a much lower rate than what he told me and at a much larger dollar amount too. So don't take it for granted that just because someone has experience in this, they get it. So if you get this, you'll be ahead of many tax preparers. So enjoy that part. So step one, ordinary income. Ordinary income is everything except for capital gain income. And then ordinary income is ordinary income minus deductions. So that would be minus your standard deduction or itemized deductions. That's the number that determines the ordinary tax bracket. Step two, let's look at our capital gain income. Capital gain income is qualified dividends and long-term capital gains. That's it. So back to step one. Ordinary income is everything except for capital gain income. Net ordinary income is ordinary income minus deductions. So we need to know step one before we care about step two, and then getting into step three, your ordinary income bracket is what determines your capital gains bracket. So that's why these are in order. Know your ordinary income bracket, then you'll know where your capital gain bracket is. You could be in a 0% capital gains bracket and 0% ordinary bracket. You could be at a 15% capital gains bracket and 0% ordinary income bracket, or multiple variations. Thing is, you need to understand ordinary income bracket before your capital gain bracket. This is where the tax preparers often get this wrong. They'll look at the tax return, look for taxable income and say, okay, that's your tax bracket. If you have a mix of capital gain and ordinary income, that'll be wrong. They're wrong. So this is a very important concept. Make your first bucket ordinary income, then your second bucket of capital gain income, then you can figure out what brackets you're in. Tax Bracket Manager answers that very quickly and easily, but otherwise the concept is ordinary income, capital gain income. So now in the next video, I'll explain the most common case where tax bracket management matters.